Good evening. This is the Elliott Wave update for the NASDAQ 100 for Thursday, February 3rd, 2022. Let me start by saying what a difference an earnings report makes. The NASDAQ basically just attempted to rally a few times today, but just sank and sank and sank. And in the last hour, they drove the NASDAQ down below 14,500 and reached a low at 14,004, I believe, 56, just before we got the close and just before Amazon literally blew the doors off of their earnings report. Amazon closed at 2,776. And the market's initial reaction was a very fast move up to 3,000. Ultimately, it got almost up to 3,300 before it pulled back into current levels. Now, the NASDAQ finished the day down over 600. That initial move pushed the market up 300. And now as we start in Globex, you can see that we're up 271 points. An amazing earnings report and reaction from the market. Now, how does that fit into what we're counting? As we left off yesterday, Facebook had disappointed the market. Facebook continued to get hammered today. Yesterday it was down, I believe, like 75 or 80 points and then rallied back. And today it dropped down to a low of below 237, rallied back up a little bit. So it was, on the close, it was down $85. Huge move for a stock of that price. It dragged everybody down. Even Google, which has got some very positive news, had a great earnings report. They have announced a 20-for-1 split, et cetera, et cetera. It got driven down 100 points today. Now has managed to rally back above 2,900. Then Tesla was down 15, rallying back. Even Netflix is rallying back. I mean, all of the components within the NASDAQ seem to be rallying back up based on Amazon's earnings. Now, when we were looking at this yesterday, I had discussed how the high that the market had reached on Wednesday during Globex at 15,249, 250, was the completion point for minor wave 1 of intermediate wave 5. And what the expectations then were for a minor wave 2 correction. Now, I have taken off the support lines coming off, but the next support line was like at 14,356. It got to 456. And I think that if it had Amazon not reported such stellar earnings, that we would have likely gone down and reached that next level. But in any case, again, I just want to reiterate, Elliott Wave does not take fundamentals into consideration, does not take any of the facts, geopolitical, anything that might be happening around the market. What Elliott Wave measures and takes into consideration is the human emotional reactions to what is happening around them. So that's what we're measuring. So when we were looking for a wave 2, I had laid it out that it would not be uncommon, and it is not uncommon, for a second wave to truly retrace almost all of wave 1. And that would have brought that market back down to 13,831. That's where wave 1 started. Getting down to nearly 62% retracement totally within the realm of reality. But being that it was a completion point, and I've now marked it as such, I may be premature, but I don't think so, that a minor wave 2 complete. What's next up? A third wave. And if you remember when I was discussing it yesterday, if this count is going to be correct, then what I would be expecting once wave 2 was complete, would the market would launch higher in the beginning stages of a third wave. Well, that's exactly what we got. And I'm going to open this up so we can maybe see. You can see this launch. The market closed at well, it started at 14,501. So we had rallied back a little bit by the bell. And then when it came out, we went from 14,501 to the high at 14,815. Awesome, awesome move, straight up. I think the first leg of that was 300 points. It was incredible to watch. Now, what are we looking for here? I am looking, number one, for the rally to continue. Pullbacks notwithstanding, but within this first leg is for wave 1 of 3 is going to be its own 5 waves up. And so I need to now, I'm going to break this down. Let's take a look at it so we can get an idea. First, let's take a look at the 30-minute chart and see how that looks inside there. Well, pretty much the same. So if anything, maybe this is 1, this might be 2. And if we get this rally picking up again tomorrow, it would not be out of the realm of reality to see the NASDAQ tack on that additional 300 points to get us back above 15,000. So it did a damn good job getting us back up off of this floor instead of just continuing to fall down. Because this selling, I have to tell you, that selling, it was intense. It was like down, down. And as we went into the bell, it's just everybody was moving the money out. Everybody was getting out of the NASDAQ because the thought process was, it's like, well, you know, Amazon's gonna, you know, Facebook failed, Amazon's gonna fail. The big difference being Amazon has Amazon Web Services. And that is where the expansion within Amazon's business has taken place. Yes, the delivery in Amazon does a great job. That also did well. But Amazon was projecting $115 to $117 billion for the first quarter. That's incredible forward guidance. Think about it. Think about it. A company that can make, I mean, yesterday or a couple of days ago, I was talking about Google and how impressed I am that Google can still maintain $68 to $70 billion in a quarter, while they have been outdone. The granddaddy of the big boys in the Titans is just shifted back over to Amazon. $115 to $117 billion in one quarter. Amazing. Of course, if they don't do that, the stock will collapse. But that's amazing. That's extremely impressive. And their earnings really just blew out the door. Just took over. Now, so it keeps us back into that intermediate fifth wave rally. And that's the good news, because I didn't want to have to bring in the possibility, because the alternate count here, folks, the alternate count is that the highs are in, and that would be at 16,768. And that what we have produced thus far is an A wave down. And then this rally back up would have been the B wave. And then this decline is the start of a C wave down. That's not the case. Everything falls back into place, leaving it as we had it. But that alternate view remains the same. I cannot say for certainty what's going to happen tomorrow or next week, right? None of us can. We can give a projection, we can give our thoughts, and we can give what I would expect to happen if this count is correct. So right now, it's holding true. The personality and characteristics of each wave has come through on a minor degree. As we move out and we start counting a larger degree, like intermediate or primary, you can imagine that if what we're witnessing on a minor degree did this much damage, if we had to take this up to an intermediate degree or higher, it's going to be more severe. But in any case, we're counting on a minor degree to finish an intermediate degree fifth wave. So for tomorrow, my expectations would be that we may see additional pullback. Somehow, I think we're going to get up higher first. Now, in the initial bounce up, we got up to the hourly 50 moving average. So we sailed right through the 4 and the 8, which totally expected. Then we made it past the hourly 200 and the hourly 20. That starts to shift things back to pointing higher, which puts us back on an hourly basis to be in an aligned position for the market to continue to advance. So first off, I would hope or expect a break above the 50 moving average. And then again, for some additional acceleration. That might happen overnight, but it might happen within that first hour of trade tomorrow as today's sellers come and it's tomorrow's buyers. Or, just we have new money coming in, we have new buyers coming in, reestablishing, whatever the case may be. But I think that could propel us to at least having an additional very successful day and tacking on an additional 300 on top of this. We were down 600. Who's to say we can't go up 600? For certain, I would believe that we can. Now, the only stick in the mud that would be is that Facebook would start to really start to falter again, because it's just that news is still being digested, and they're still talking about what their costs are going to be moving forward, and that's just taking care of all the switch from Facebook to Metaverse, et cetera, and dealing with all of that, dealing with all the corporate stuff. So, but in any case, we've now got that bit of positive news to come in that we can add to the positive news from Google, that we can add to the positive picture that Microsoft presented. So it begins to put back into place who is likely or which companies are likely going to be bringing us to the higher levels. Now, again, Apple did not drift below 170. So don't forget that just prior to their earnings, they were down at, I think, 162 or 165. And so we've got Apple's positive earnings and a decent outlook. So again, that's what I think the market starts to build on. And that fits because what we're looking for, a third wave. Third waves, again, I'm going to repeat myself, are normally the longest and the strongest wave within a 5-wave sequence. So out of waves 1, 3, and 5, 3 is normally the longest and the strongest. So here we have, if we have wave 1 topping at 15,260, and it's down here at 13,831, we've got quite a big move. We have quite a big move for wave 3. So it's 13,831. Wave 1 was 1,400 points. Wave 3 should be taking us up. And here I have, for the entire move, I've got these wonderful Fibonacci's. Wave 3, Wave 3 began at 14,000. So if it goes, if we get a 1,500 point move, we're up to 15,009, 1,600, 16,000 back again. That is possible. We've now gotten that injection of positive versus the injections of negative that we have. And Facebook put in a big injection of negative. Now we're going to replace it with bringing the positive back in, but please bear in mind, nothing goes straight up or straight down. We will rally, we will pull back, rally, pull back, rally. That'll be the third wave. Within that 3 of 3 move, that's where I'm expecting an additional extension of a 1, 2, 3, 4, 5, right? And don't forget, within that, we have our point of control, our point, not point of control, excuse me, our point of recognition. That is the point where the market and its participants realize, wow, we're going up. And we see a lot of position shifting. We see a lot of things going on as things are cemented for the rally. So it's a repeat. We had it here. We'll see it again in the third, but it'll be even stronger because we're in the 3 of 3 of move. So I definitely feel that we'll break above 15,080. We should easily break back above 15,000. Oops, come on back the other way. 15,260 or 250. That's right there. And once that's achieved, I don't really have, but I can probably add some. Let me see if I can get this back to my other, yeah, there. So let's just put, for the conversation, we're going to put in some Fibonacci extensions for the possible move for this third wave. And then I'm going to go down. That didn't come out just as the way I wanted it. So let me just, this is going to be an estimate because I don't have the numbers exact, but just for the sake of our update here, I'd be definitely looking for at least wave 3 to equal wave 1. And that's up here at 15,884, but I'm going to say 15,900, which is what I said before. More normal would be 1.618. And then look at where we are, 2 new highs. The old high was 16,768. So 69, new high. If it only makes it 2, like 16,617, pulls back in a 4, and then we go up in a 5. All good. Ultimately, what we're looking for, again, I'm going to open it up. We're looking for something to come up into this area where the entire intermediate wave 5 will equal 0.618 of that intermediate third wave. And that comes in at 17,300 in that neighborhood. That still is in play. So, great day. Not the easiest to trade. I'm going to tell you, it was not the easiest to trade because it was corrective. Now, that could just be me, but I always have a little bit more difficult time when a market is correcting because it jerks itself around. And that was a lot happening a lot today, where we had markets, suddenly they just come in and they buy a big bunch, then they would sell it down, and it just was not consistent. In other words, we didn't have follow through on particular moves until the selling got a little bit more intense. Then it was a little bit easier to trade and extremely profitable. But trading a smaller account was more difficult today because of the size of the jerking around of the market. It was very easy today for that market in either direction. If it would rally up and then it starts to pull back, and I would buy it in a small account because I'm feeling that we're going to get follow through to the upside, and the next move was down, and suddenly the market is dropping 10 or 20 points on a small account, that's more than that account really wants to handle. That's more than I want to risk when trading that small account. So again, I was attempting to trade a couple of smaller accounts that I have to build them up, and didn't lose a great deal of money, but they ended up being losing days there. Now, when I was trading an account that can handle that type of a move, it was much, much easier. And you could build the position and then you could work it in the direction. So bear that in mind as we go through this process. I also think that because it's not necessarily going to be corrective, we are now moving back into an impulse. that when the buyers step in, it should see that follow through. We'll see that follow through. When the sellers come in, we'll see those corrections, and there'll be 3 waves. So the impulses will be 5, the 3, and the corrections will be 3. All right, so I'm going to leave it there. Downside now, I don't necessarily see what would come in to negate all of this upside, but just be aware that if we start to drop back below the 20, hourly 20, which is at 14,755, and then the 200, which is at 14,732, that will draw in more sellers. That will produce some negative action for the market, for the NASDAQ, and draw it lower. So pullbacks, I would be looking to be held but at support provided by those moving averages. When they break, close in a negative. Okay, I'm going to leave it there. Our next update will be on Thursday, February the 4th.